There's three major opportunities in distressed commercial real estate that you don't want to miss out on in 2024. My name is Steve Peterson, and welcome to our channel where we talk all things commercial and investment real estate from a Main Street level, not a Wall Street level, Main Street, feet to the street. And there's three opportunities you don't want to miss out on this year because we are entering into a distressed market for commercial real estate. Now, that don't mean 2008, 2009, because I don't know, we're not there and we probably won't see that again, particularly because in my market in the Bay Area, Central Valley, Northern California, where I work, what I would say, and you probably seen this in your market, the amount of foreclosures, the amount of properties that are physically in default. We've got a notice of default filed, notice of trustee sale filed, bankruptcies filed. The amount of those properties are not matching up with properties that I know are in distress. And I think that's because of the lenders of the world, especially banks. They're doing everything they can do to work things out with their borrowers, right? Because they don't want to see a 2008 situation where we have the mass foreclosures all at the same time, which are going to push values down. So lenders learned from 2008 and they're doing everything they can do to work this thing out. But there's three opportunities I want to talk to you about where all of these opportunities have to do with solving problems. So the first thing is acquiring properties, commercial properties, as a short sale, but pre-foreclosure, before the bank takes them back. Because I don't think the banks really want to take back a lot of commercial properties, especially large ones. They would much rather take the loss on the front end, because when they take the property back, they got to put that on their books. They got to set aside a certain amount of money. That restricts them from going out and lending more. They got a black eye on their corporate credit. It's not a good thing. If they know they're going to take the loss anyway, might as well take it up front in a form of a short sale. And so this opportunity really is going to present itself to people who know how to work these deals. And if you don't know what a short sale is, that means when you sell the property or you buy the property for less than the existing loan amount is. So that means that the lender who has the paper, they're taking a short. So they're taking a loss. Short sale. So they're going to take that same loss in a regular foreclosure and an REO. But the difference is it's much faster. And they never have to own the real estate. They also are not property managers, so they're going to hire people to manage the property. It's going to be a lot of cost. They don't want to do that. They just want to get as much of their money back as they can possibly get back as soon as they can get it back. So what does that mean for the investor and for brokers and agents out there? That means that is the type of transaction that we should be going after. And in doing so, what you're also doing with the borrower is you're helping them to solve a problem. Look, I know a property in my marketplace, the loan's 3.6. The property's barely worth $2 million. I mean, barely. 2 million would be generous. The loan's 3.6. So I'm working to get in contact with this, owner to see if we can work something out. Because it's going to be, the owner's going to take an L, the bank's going to take a big L. But the key is to don't make a bad situation worse, right? So we can come in and work a short sale. We solve a problem for the borrower, right? And it's less of an impact to their overall credit score and their life than going through a full foreclosure, which probably means they went through a bankruptcy, which can be very painful, right? And so if we work out a short sale, it solves problems for the borrower, solves problems for the bank, and it gets you an excellent deal, right? And then what it involves a little bit of upfront work for you contacting the owners of the properties. And that's what we as brokers do. That's why it's interesting to me when real estate investors say, I don't use brokers. The top investors I know all use brokers. You know why? Because we always have properties that are off market. Essentially, every property that we sell as brokers is off market at one point in time. What we do is bring them to the market, right? And so sometime in the interest of time, like foreclosures, getting deals done fast, we can get a deal done before it gets to the market via a short sale where we solve problems for everybody and we create value for the investors and we create value for ourselves if we are investors as well. Commercial short sales, huge opportunity 2024. The next opportunity, I think, is in distressed paper. It's actually buying the paper, buying the loans. The banks don't want to take this property back. And they don't want to take these properties back like I just explained. So they're doing everything they can do to prevent that. So if you can come in and purchase the paper at a discount, you take over their position. Now, what you can do is you can work something out with the borrower. You now at a much lower position than the bank was because you should buy it at a discount. Or if you can't work it out with the borrower, you take over the lender's position. You finish off the foreclosure. It's called loan-to-own strategy. All right, it could be an aggressive strategy, you know what I mean? But a lot of investors do it It also can be a great way to work out a winning situation with the borrower. If you have a responsible borrower, if you have somebody who just basically, look, the loan is just, the problem of the deal, right? And that, that has become that problem in a lot of situations these days. And it's also something where I think you're going to see a lot of lenders who want to sell the paper, because in 2024, a lot of loans, commercial loans, are maturing. So they need to be paid off. And again, a lot of these lenders, especially banks, they don't want the properties on their books. So they would rather take the loss in the form of short sale, or they'd rather take the loss in the form of selling the paper at a discount. So you as an investor, you can come in and purchase that paper, and then, hey, if you can get a hold of the borrower, you could actually work something out where they're paying, if they can get back on track, they're paying you a really good interest rate, and you got a really good cash flow return. And I know a lot of companies that do just that. And if you buying, now this is again for commercial real estate, if you buying properties where you like, look, owner's in bankruptcy, loans upside down, bank don't want to take it, so it's a huge problem. Meanwhile, the tenants are suffering, the neighborhood's suffering, the quality housing is not happening because the owner's checked out, he or she's in bankruptcy. And sometimes the lender will appoint a receiver, sometimes they don't, and if they appoint a receiver, at least the receiver comes in and takes care of the property. What happens a lot of times, at least in my experience, is this receiver don't get appointed and the property gets out of control. It's bad for the buildings, bad for the tenants, it's bad for the neighborhood. So this is a way, again, of solving problems with a solution where you can build value and make money. And the third way is through creative financing. I think a lot of deals are going to have to get done with some element of seller financing. Say you're a seller, you got a loan that's due. You got to refinance it, you're not able to refinance it. All right, that means you got to sell it. You're trying to sell it, it's just not moving. And a big part of the reason why it's not moving is because of the cost of capital. That new buyer has got to go get a loan. That loan's a little bit higher than you're probably your loan that's coming due. And then even if they can get an interest rate where they can make some money, they got to put a lot of money down. A lot of lenders is very, very, very conservative right now. 35-40% the minimum down payment right now, typically. So if you as a seller, you can carry some of that financing in the form of a note, you lighten the blow for the new buyer coming in, you solve your problem, getting that, maturing loan paid for, and now a transaction can happen. They don't pay you, you can step back in, take over the property. All right, they do pay you off, you just deferred your compensation, and you got a great return. And you got to know how to structure this. You should be working with an expert. And if you're not, you really need to know what you're doing. Okay. But these are three major opportunities in 2024 that I think, and I'm not, opportunities for people to solve problems, not opportunities for people to be an opportunist. All right. I want to say that. I want to state that because a big part of what I'm trying to do with my content and with my book of business and with my clients is to deliver value to the marketplace in a way that is profitable. We got to make a profit, but also is sustainable and is bringing value to everyone involved. Instead of just taking advantage of people, you're solving a problem. And a lot of that has to do with your approach, because it can be looked upon either way, but the way you approach things. And I've seen people just come through like gangster vultures. And I've also seen people come through, with a cape on like Superman, you know what I mean? Or Superwoman. So, throw the cape on, solve some problems, make some money, do some good, because we got some issues to work through in 2024. But let's do this, and let's do it together with good thoughts, good wisdom, good action. Give me some thoughts and feedback on what you think is the opportunity. What do you think about these particular opportunities? And let's keep the thoughts and ideas creative, because that's what we're gonna need to do to really be profitable. And I think there's a lot of opportunities. It's not gonna be easy, which is why I said we gotta keep thinking, keep it creative. To the next video, deuces.